What is a physician mortgage? What is meant by the term debt-to-income ratio, PMI, and why does it affect our lending abilities? What is the future of physician mortgage programs given the recent current events? Learn the answers to these questions and many more on this episode of the Talk to Me Doc podcast.
Welcome to the Talk to Me Doc podcast, where it's all about serving the early career physician. Let's talk about the unique issues that face us so we can create a better future for ourselves and those to come. And now your host, Dr. Andrew Tisser.
Hey guys, it's Andrew. Welcome back to the Talk to Me Doc podcast. I am so grateful that you are here with me today. If you're a returning listener, thanks for coming back. If you're new to the show, stay tuned because today, like on every episode, I'm bringing you the best guests from all around healthcare and beyond to discuss issues that relate to the early career physician. Today, we have mortgage extraordinaire Mike Parisi. Mike Parisi is a KeyBank mortgage advisor. He professionally has 26 years in lending, of which the last 22 years have been spent in mortgage and home lending. He is a graduate of Buffalo State College with a bachelor's in business administration. Personally, Mike is a father of three, an avid and long-suffering Buffalo Bills and Sabres fan. He enjoys cooking in the outdoors, golf, fishing, and biking. And his favorite movies are The Sound of Music and The Godfather. Well, I know I'm excited, so let's get Mike Parisi onto the show. Mike Parisi, welcome to the Talk to Me Doc podcast.
Thank you for having me, Dr. Tisser. I've been looking forward to it.
Me as well. So I recorded a little bit about you for the listeners, but in your own words, could you tell everybody who you are and what you do?
Of course. Again, the name is Mike Parisi. I am with KeyBank Mortgage. I am located in the Western New York area, basically out of Buffalo, New York. My entire career, working career, has been spent in lending and specifically in mortgage since 1998. I did start working with KeyBank Mortgage in 2013. So, over 20 years in the mortgage industry and the last 7 years with KeyBank Mortgage.
Great. Well, full disclosure for the listeners, Mike helped secure my mortgage for my wife and I, and he was so helpful and so knowledgeable in the whole process that I thought we'd have him on the show to give us a little information about mortgages as they relate to physicians.
Thank you for that. I appreciate that for sure.
Sure. So let's get right into it, Mike. So what is a physician mortgage or doctor's mortgage as we hear about sometimes?
Sure. And just for the listeners, the loan and the guidelines also apply to dental professionals. So it is designed for physicians and for dentists. And KeyBank and other lenders out there, a few select lenders, have recognized the unique financial needs that physicians encounter as they prepare for they're going through their education, making the transition into their career field, heavy burdens, and I'll get right to the big one for medical professionals is the student loan debt. That can be, and it was previously a big hindrance towards specifically, again, medical professionals being able to purchase a home as soon as they would have liked to have purchased a home. So these programs were designed to make it a bit easier in recognition of, what doctors and dentists have to tackle as they prepare for their careers. So, the medical professionals with entering a field, it's the field that you're entering, I should say, considered stable from an underwriting standpoint. It's been determined that your field does pose less risk from an underwriting standpoint. So that, along with the fact that you have this in most cases, not all, but in many cases, that heavy burden of student loan debt. These loans were designed to make it a bit easier for you professionals in the medical field to be able to become a homeowner. And the way we've done that is basically twofold. The big thing being, number one, no private mortgage insurance, and I know we will get into talking about that. But no private mortgage insurance is required with this loan. At the same time, the interest rates are still going to be comparable to a standard conventional mortgage. The third component is the fact that you can borrow more than the standard conventional loan limits allow for, and they do periodically change. Right now, the that loan amount limit is $510,000. So if you're looking to purchase a home in excess of that amount with a loan amount in excess of that, you are still going to get yourself some very favorable terms.
Well, that makes a lot of sense. I think it comes down to a concept that people hear a lot about called the debt to income ratio. And could you explain a little bit what that is? I know a lot of people hear debt to income a lot and really don't get what it is.
Of course, yes, that's a big component of being able to qualify for a mortgage, whether it's a specialized medical professional loan or an FHA mortgage or a standard conventional mortgage. Debt to income ratio, it's a pretty simple calculation. How much debt do you have as a percentage of your income, and it's determined basically on a monthly basis. What is not taken into consideration are your utility bills, your cell phone bills, your car insurance, anything that will appear on a credit report, personal loans through any banks, obviously credit cards, any other mortgages that you have, and including your new mortgage payment, which would include the property taxes on the home and your homeowners insurance, calculated on a monthly basis, along with the principal and interest on the mortgage, and if there is PMI, the private mortgage insurance. That's all considered your debt. How much is that debt as a percentage of your income determines how much you would qualify for. The standard debt to income ratio, it's different for each program. Specifically with the physician loan program, it's 45%, which means the maximum amount of debt that you can carry on a monthly basis, again, including your proposed mortgage payment, cannot exceed 45% of your monthly gross income. That's another sort of confusing point of the debt to income ratio. It's not your after tax income. Everything is actually based off of your gross income. So if you are earning $10,000 per month, the maximum amount of debt that you can have is up to $4,500. In some cases, at least with key bank guidelines, what we allow, and I think other lenders do as well, there's a little bit of a buffer where that debt to income ratio can be increased to 50% based on what we call compensating factors. We'll take a little bit of a closer look at the credit history. How much cash do you have available after you close on your mortgage? We don't, we're not a fan of seeing somebody go into starting to own a home with, $700 in the bank. If you have, if you have a nice cushion, that can sometimes allow us to stretch that debt to income ratio guideline from 45 up to 50%.
That makes a lot of sense. Well, so we touched on it a little bit. So PMI, or private mortgage insurance, what is that, and why is it beneficial that these doctors programs and dental programs allow you to have a loan without it?
Right. Yeah, a lot of folks do think that PMI, private mortgage insurance, and the companies themselves are evil. They're really not. They actually serve a good purpose, and the purpose that they serve is allowing so many more people in the U.S. to be able to purchase a home. PMI really started to come to prominence, many years ago. I think it was as a result of really the Great Depression. A lot of folks, when that occurred, a lot of folks obviously could not pay their mortgages. A lot of banks, suffered, tremendous losses. So pretty sure back in around the 1950s, private mortgage insurance company started. And what a private mortgage insurance company will do is absorb some of the costs in the event that a homeowner is unable to pay the mortgage. And if the unfortunate circumstance of a foreclosure occurs, the bank isn't going to lose, quite as much as they could, because the mortgage insurance company will step in and, like I said, absorb some of the cost. So if you put down at least 20% when you purchase a home through a standard conventional mortgage, PMI is not required. That 20% down has just been established as the benchmark, as far as needing it or not needing it. So if you look at it, if you consider that, without private mortgage insurance companies, everybody would need to put down basically 20%. We know how long that could take, many years, in order for somebody to accumulate that, those amount of funds. So the mortgage insurance companies are created to assist banks in the event of a foreclosure. They will take on some of the costs of, the legal costs that are involved in that, the cost of relisting a home through a real estate company, the cost of maintaining a property while it's vacant. Obviously, there's a lot of cost involved in that. So that's what these mortgage insurance companies, that's the purpose that they serve, really is to allow for and promote more home ownership throughout the country.
I get it. So it's really nice with these physician programs and dental programs that you can not have that little extra cost because it's my understanding just it's a basis of risk, right? So you consider physicians and dentists less risky borrowers. So as such, you can waive the mortgage insurance. Is that right?
That's exactly right. Any type of credit from any lending institution, everything is based on risk. So the fact that, yes, we sell these programs or offer these loan programs without mortgage insurance, we are actually taking on all of the risk. There is no private mortgage insurance company to step in the event that, again, if that unfortunate circumstance occurs of someone not being able to, whatever life changes occur, unable to pay the mortgage. Yeah, we're taking on all of that risk. But again, because of the strength that we see in medical professionals from an underwriting standpoint, that's why it is worth the risk to offer this program without having to require that private mortgage insurance. Because again, this type of a program, whether it's KeyBank or any other lenders out there, it's considered a portfolio loan program, which means, again, that lender is taking on 100% of the risk, as opposed to a conventional mortgage is actually supported by Fannie Mae or Freddie Mac. Those are the institutions that basically give funds to all the banks across the lenders across the country, and they say, here's money to lend to the public, and here are the guidelines. And a portion of those guidelines include less than 20% down payment. The private mortgage insurance is then required.
Sure. No, that makes a lot of sense. Well, so let's say next question, Mike. Let's say you got a doc and they come to you and they say, "Hey, Mike, I want to buy a home. I got enough for 20% down. I have it in the bank. But should they throw down the 20%, or should they consider one of these lower down payment options and in order to maintain cash flow, and or perhaps invest in something else?" I know that's probably dependent on interest rates, but what do you say to somebody like that?
Sure, and there have been some instances, not many, but I've had instances of certainly where folks have come to me with that exact scenario, and really, my job is to just educate that person when they come to me, just on some of the things you just touched on. How important to you is cash flow? Are there other investments that you are considering, whether it be a true financial investment or maybe another property down the line in the shorter term? And also, like you touched on there, Andrew, the interest rate environment at that time, is is putting down only 5% or 10%, taking advantage of the physician loan offering, is the cost, is a cost benefit there. Really, ultimately, my job again is just to give, someone who comes to me is trusting me with really the most important transaction to that point of their lives, most likely. So my job is to give all the information that I possibly can to someone so that they can make a comfortable and informed decision. So, yeah, I mean, that's, it's not always that the physician loan is hands down the best option for everybody. It usually is after we really delve into all the details of, whatever options are available to an individual. So, yeah, I mean, that's a great position to be in for sure. But, like I said, normally after we have those conversations, the physician loan does win out just because the cost benefit is there, and, can allow someone to, use those funds, elsewhere.
Right, right, for sure. Well, that's, just to the listeners out there, that's the importance of having a really good um, mortgage, person to deal with that can talk you through the different scenarios and help you with what you don't know about. I mean, um, that's the good thing about hiring experts, right? For a funny
That's right.
story, the yesterday we have an old sprinkler system, and there was a little leak in one of the sprinklers things, and I had the plumber came over. He took his wrench out and made one turn, and that was it. And that was the whole deal. But I don't know.
Right,
That's why I call
right,
the
right.
experts, right?
All right, you're on par with me as far as the handyman
Yeah,
thing
no.
goes.
As long as I recognize that I'm not good at it, that's the
Yeah,
important thing. Uh, so
yeah.
let's see, move it on. Well, we've seen a lot change in the financial world over the last few months, and while interest rates are really at all time lows right now, um, do you think these physician programs will continue given some of the economic uncertainty? I know we're still probably in a lower risk category, but maybe a little higher risk than we once were. What are your thoughts on that?
Well, we've already seen the impact, and I'm not sure, up until, well, what was it? At some point in March, I don't remember the exact date, but yes, that is when we altered our physician and dentist loan offering from no down payment to requiring a 5% down payment as a result of this economic uncertainty. So we've already seen the impact of it. I know, I'm pretty sure that every lender and any lender that was also offering the no down payment feature, pretty sure everybody is down to requiring at least 5%. Maybe wrong about that, but um, and again, it comes back to what I mentioned earlier, this portfolio loan
Hmm.
type of a program where the bank is taking on all of the risk. That's where you're going to see retraction from, this, you know, sort of aggressive underwriting tactic. Obviously, going forward is anybody's guess. Um, because we're talking, we're at July 17th of 2020. Obviously, we're all hoping for, everything to turn around. I mean, this is all great that interest rates are low, and certainly there's, an enormous amount of people taking advantage of that. Um, I personally wish that, that the reason that the rates are so low right now is not as a result of this, you know, terrible situation that we're in. But yeah, this is obviously yet still to unfold. I do believe, to give you a shorter answer to your question, yes, the fact that history has taught us that the medical professionals that have taken advantage of these loans is still, a lower risk. So yeah, I would expect that to continue, but yeah, for sure, it's already been impacted. Could it be impacted again? It can. In the short term, the folks behind the scene that do all of that analysis have to let us know if those particular loans are still performing.
Sure. Yeah, absolutely. Well, Mike, what piece of it do you have any single piece of advice for docs? Just getting out of their residency and starting their career. What would you say to these people as it pertains to buying a home and mortgages?
Sure. I would, honestly, Andrew, I would even suggest that folks, as soon as they are entering their residency and have, somewhat of a, I'm assuming they'll have a pretty good idea of the path that they're on, and that they want to be on in the coming years. As soon as you become a resident and, you've already made all of your choices there, talk to a mortgage professional at that point. Um, we actually, just in the last, I'm going to say about year and a half, we opened up the mortgage professional, I'm sorry, the medical professional program to residents. I actually really did just close a loan for a fellow 2 months ago. He started he called me when he started his he was only in his residency, I think, for maybe a week.
Wow.
So yeah, now certainly he had to be qualified on his resident pay, not on his anything having to do with his future earnings yet. But I would suggest talk to a a mortgage professional at that point, so that you can really get an understanding and sort of start, getting your ducks in a row at that point, because, there's definitely some things that you're going to want to know. You don't want to assume anything. Um, one of the biggest pain points for folks, in any type of a mortgage application process are, the funds that you have to have available when you go to the closing. We don't want to, as a mortgage advisor, we sort of cringe when we hear, yeah, I've been saving cash under my mattress for the last 2 years. I'm in really good shape. I've got $20,000 sitting here. Well, that's a problem. We have to be able to document where those funds came from. If it's just this large cash deposit that happened to show up in your bank account, you're going to have to find funds elsewhere. Well, we won't be able to use those funds because we don't know if you actually borrowed that money from someone or from another lender. So, and I'm giving you just one example of the type of information that you're going to want to, be educated on, so that you can be prepared for that moment when you do, in earnest start looking for a home. So I would say, find yourself a good, mortgage professional, someone who does obviously have experience offering, this, specialized type of financing. And, that mortgage professional will be able to tell you what type of documentation you're going to want to have to set aside. Information on your student loans, certainly any licensing, any medical degrees, all of that you are going to need to produce when when you do officially go to apply for a mortgage. So to try to get an idea of that ahead of time, it's going to help you. The obvious short answer to that is maintain your credit. Certainly, with, again, the lender taking on all of the risk in this situation, they're going to be looking for credit scores, upwards of 700 in most cases. So make sure that you're diligent in maintaining your credit, your student loans. I know, whether you're a medical professional or not, I know it's sometimes tough to manage the numerous student loans that you're trying to take on, and all at one time. So yeah, talk to a mortgage professional as early as when you're signing up for your residency.
Yeah, no, that's great advice. I think too, if you approached a mortgage professional and kind of laid it all out there for you, they could give you some strategies to help get your credit into a better position too. Sometimes it's little things that people don't realize, and since you guys do this day in and day out, you could say, hey, you might want to pay this card off, or you might want to do X, Y, Z, and that could really get you in a better position.
That is exactly right. That's a great point that you bring up, because, yeah, I mean, even if you're not ready to apply for a mortgage, today, you're thinking about doing something 6 months, 12 months down the line. I always recommend to folks, you know what, let's just take a look at your credit so that I can give you, the information that you need, again, to, just like you said, Andrew, strategize, so that when you are ready, you're going to be in a really good position to be able to get what you want and afford what you want.
Sure. And maybe set some realistic expectations out as what you are going to be able to afford as well. You don't want to take on more mortgage than you can afford either.
That's exactly right. Yeah, that's exactly right. I mean, and I've done loans for some folks too that maybe are starting their careers with their particular hospital or healthcare provider, let's say on October 1st, and we've been able to close mortgages even in as early, if again, if you're starting your career in October, we could possibly close as early as July, certainly as early as August, even before you know you have even, collected your first paycheck. Certainly, we're going to have to document that, with employment contracts and making sure you did meet all the other criteria that you needed to with regards to, completing your residency and your education. But, yeah, like I said, it's critical to talk to someone early. Don't wait, until the week that you want to start shopping for a home, because you will, you'll encounter some things that and be given some information that you were not expecting.
Yep, that's definitely true. Well, Mike, let's get to know you a little bit better. What do you like to do for fun?
Relax, especially now, when I find some time to relax, it's all good. But, living where I'm at in Western New York, the time to be spent outdoors is short. So, but I do like to take advantage of it. Pretty basic guy. I mean, I like to ride my bike. I like to golf when I can, set aside that much time. I like to take walks on trails. I mean, we've got a spectacular area here, the Niagara Gorge, that runs between the U.S. and Canadian border. So simple, not too strenuous activities outdoors is what I enjoy doing. Wintertime, my favorite place is my fireplace, sitting there with a nice glass of Cabernet or something of that nature is what works for me. Certainly with some good reading material in hand as well.
Yeah, that's for those of you who haven't been to Western New York. Our summers are short, but they're packed with full of activities.
Yeah. Well, yeah. If you take advantage of it, that's right.
So you said you like some reading materials. Do you have a book recommendation for the listeners?
I'm quite honestly not big into the novel reading. I do like self-help type books. One of my favorites is Who Moved My Cheese. I'm not sure if you're familiar with that. I can't think of who the author is of it right now, but so it's a short self-help book. It's a great way, at least in my opinion, to to get a really good understanding of how to overcome and manage, a lot of the unexpected changes that occur in life. But yeah, as of right now, that's probably my favorite book. As simple as it sounds.
Oh, I haven't read that one. I'm a big fan of that genre as well, so I'll have to check that out.
Check it out. Who Moved My Cheese? Yeah, it's it is. It's an interesting approach to how this person wrote this book. And I do recommend it to you if you're into that.
Yeah, no, I'll put it on the ever-growing list.
Right.
So, Mike, if people want to reach out to you, is there a way they can get in touch if they're local or if they want to be referred to someone in their area?
Sure. I'm not afraid to put my cell phone number out there. It is 716-913-3536. If you are out there just looking, as we already discussed, just for some general basic information, more than happy to to help folks. I love doing this. I honestly do have a passion for what I do. Primarily because people come to me. You're literally trusting me again with the most important financial transaction that you're going to undertake, probably to that point in your life. I don't take that lightly. So yeah, I'm okay with phone calls. Email address is Michael_P_Parisi @keybank.com. And Parisi is spelled Parisi.
Wonderful, and I'll put that information in the show notes for the listeners.
Okay.
If you need some help, give Mike a call. He is wonderful and great at what he does. So this has been fun, Mike. Thanks so much for coming on the show and educating our listeners about, like you said, the most important financial decision of their lives.
Yeah, no, Andrew, I sincerely appreciate the invitation for sure. I'll welcome any listeners to to contact me, and certainly I know you and I will be in touch at different points here, Andrew. So, no, thank you again, much
right.
appreciated.
Thanks, Mike. What an amazing show with Mike Parisi, mortgage extraordinaire. Mike has really been instrumental in my own lending and is really just a fund of knowledge. I appreciated his discussion about debt-to-income ratios, how banks view physicians in regards to risk, private mortgage insurance, and when maybe putting 20% down is not the best idea. It was also interesting to get his perspective on where the lending industry is going given the COVID-19 crisis. I think this was a really educational episode and will hold a lot of value for the listeners. That's all we have for today. Thank you so much again for listening. If you wouldn't mind, please log on to Apple Podcasts and give me an honest rating and review. It helps get the show out there. Additionally, if you could share this with your colleagues early in their career, or just who want to learn more about these things, that would be great. The other thing I'd like you to do after listening is visit my website at andrewtisserdo.com. That's Andrew, TISSERDO.com, and give me some feedback. I'm always available to chat on any of my social platforms, email, or via the website. Thank you again for listening, and until next time, guys, keep talking. All opinions expressed by the guest in this episode are solely the guest's opinions and do not reflect the opinions of Andrew Tisser DO, Talk to Me Doc LLC, or any affiliates thereof. The guest's opinions are based upon information he or she considers reliable, but Andrew Tisser DO, Talk to Me Doc LLC, nor any affiliates thereof warrant its completeness or accuracy. The guest, Andrew Tisser DO, Talk to Me Doc LLC, or any affiliates thereof are not under any obligation to update or correct any information provided in this episode. The guest statements and opinions are subject to change without notice.